You stare at the screen. The green numbers in your portfolio whisper that you are brilliant. You think you are building wealth just by pressing a few keys, just by riding the trends. You are convinced you are witnessing the awakening of a financial genius. You are dead wrong. You are just an ordinary biological algorithm, drunk on the synthetic dopamine the system injects into your veins. This delusion of invincibility you feel today is nothing new. This feeling of beating the market is not a novel emotion. It is a century-old software bug, hard-coded into the evolutionary wiring of the human brain. Back in the Roaring '20s, 1929, millions walking the streets of New York were riding the exact same chemical high. Waiters, drivers, teachers were trading stock tips. Everyone was a genius. Everyone was winning. Then came that infamous October morning, that moment of sheer panic. It started with Black Thursday. It turned into absolute hell on Black Monday. In just a matter of days, $528 billion in today's money vanished from the stock market. The Dow Jones crashed 89% from its peak. The shock wave hit the globe. 15 million people woke up in the middle of absolute nothingness. 9,000 banks shut their doors. Doctors, lawyers, top executives, men who were smoking cigars in elite restaurants just yesterday, men who thought they were the masters of the universe. They were wiped out of the game. Within a few months, they turned into desperate vagabonds, sleeping in the wooden boxcars of freight trains. Their living standards instantly melted down by 40%. 2 million people lost their homes. More importantly, they lost their grip on reality. They taught you this was an unfortunate macroeconomic accident in schools and universities. They told you the system overheated. They said the invisible hand of the market stumbled. They called it an anomaly. This is a massive systemic lie. Economic crashes are never accidents. Crises are flawless wealth transfer mechanisms, engineered by the rational minority to liquidate the emotional, greedy majority. The money did not disappear in 1929. It did not evaporate. It did not vanish into the atmosphere. It merely changed hands. It left the pockets of those who thought they were smart. It entered the vaults of those who actually were. If you want to understand this blood sport, stop staring at complex charts on a screen. Focus on the biological vulnerabilities inside your own brain. Interest rates do not drive the market. Corporate balance sheets do not drive the market. Algorithms do not drive the market. Fear drives the market. Greed drives the market. The fear of missing out and an infinite craving for dopamine drive the market. You do not need to look at the uneducated man on the street to see this invincible hubris of human biology. Just look at the greatest intellects of the era. Irving Fisher, the legendary Yale professor, the father of modern macroeconomics, the most brilliant mind of his time. Just days before the crash, he vomited his historic arrogance into the newspapers. He declared that stock prices had reached a permanently high plateau. Fisher was no fool. He was a mathematical genius, but his brain succumbed to the chemicals, the very chemicals released by the illusion of wealth he had created. Like every mortal shackled to the market by their biology, he joined the herd. He bought into the leverage. His intellect could not overcome the mental blindness induced by his greed. The crash hit. The greatest economic authority of the era wiped out. He lost his multi-million-dollar fortune and hit absolute zero. This is the exact paradox of the experts. When dopamine hijacks your decision-making mechanisms, your IQ becomes irrelevant. Ignorance did not march the masses to the gallows in 1929. This universal biological blindness did. The architects of the system knew the weak spot of the crowds perfectly well, the lust for get-rich-quick schemes. They allowed retail investors to buy stocks with just a 10% margin. You could buy $100 worth of stock with $10 in your pocket. This was buying on margin. In reality, it was a synthetic drug distributed to the public by the financial elites. Leverage blindness enslaved the entire society. People used money they did not have. They started worshiping pieces of paper they believed would go up forever. Holding companies, corporate sponsors, and massive investment trusts were running a completely different racket behind the curtain. Smart money pumped artificial scarcity into the market. They multiplied the value of their assets on paper. They issued billions of dollars in new stock. The herd attacked these inflated papers like starving wolves. FOMO completely paralyzed all rational thought. The mania reached its absolute peak. Then the rational minority quietly pushed the button. September 1929. The smart money saw the absurd divergence between actual corporate earnings and stock prices. They quietly got up from the table, Price-to-earnings ratios had breached 15. The numbers no longer reflected reality. This intelligent minority dumped their shares onto the euphoric crowds at the absolute top. They went to cash. They moved to liquidity. They took shelter in gold. They sat back and watched like apex predators waiting for their prey. Late October, the lending brokerages suddenly demanded their money back, margin call. The exact second the illusion shattered, they pulled the plug on the system. People were demanded to immediately pay money they did not have. The forced liquidation spiral was triggered. Anyone who could not post additional collateral rushed to the exits all at once. Prices went into a freefall. Panic hijacked minds in a matter of seconds. As prices plummeted, the weight of the debt surged. As the debt surged, panic selling became far more violent. You cannot find a buyer at a table where everyone is a seller. Those arrogant brains dreaming of easy money a week ago were now poisoned by pure terror. The system worked flawlessly. The masses bought assets on credit. Their collateral was wiped out. Every single asset passed into the vaults of brokerages, investment firms, and banks. One by one, the entire savings of retail investors melted into the balance sheets of the minority who engineered the illusion. The class liquidation was complete. Irving Fisher lost everything. He would later explain this exact process with his debt deflation theory. Deflation begins when prices crash. The purchasing power of money increases, but the nominal value of debt never changes. You borrowed 100 units for an asset worth 100 units yesterday. The asset drops to 10 units today. Your debt is still exactly 100 units. Every single unpaid dollar of that debt is now fundamentally more valuable. Wealth flows. It drains from the so-called smart ones who bought into speculative dreams on credit. It floods toward the cold-blooded, truly smart ones waiting in cash. The mechanism is that brutal. It is that simple. Cash is king. The market hit rock bottom. Smart money moved in. They bought back the very companies they had dumped on the masses at premium prices just months prior. They bought the factories of defaulting industrialists. They bought the lands of bankrupt farmers. They bought it all back for pennies on the dollar. They did not just buy assets, they bought the blood, tears, and sheer terror of the man on the street. The majority lacked the mental bandwidth to face this manipulation. They did not code the economic collapse as a ruthless construct of capital. They coded it as their own individual failure. They carried the sins of the system on their own shoulders. Self-destruction began. Men who could not feed their families. Men who lost their homes. Men whose status hit absolute zero. They were consumed by intense shame. They took off their jackets on crowded avenues. They threw themselves from skyscrapers into the void. Suicide rates hit an all-time historical high in 1933. The survivors could not look their families in the eye out of pure shame. They abandoned them. The country filled up with broken male silhouettes, walking aimlessly in the streets, condemning themselves to the poor man's divorce. They did not blame the machine engineered by the elites. They blamed their own reflections in the mirror. This is the greatest, darkest triumph of the system. It robs you, it steals your life. At the end of the day, it brainwashes you into believing it was your own fault. Now take your eyes off that screen. Look again at those digital charts. Look at those easy wealth fairy tales pumped into your veins every single day. Look at the fake geniuses manufactured by social media. Today's financial world is nothing but a high-resolution digital simulation of the 1929 crash. Only the tools have changed. Only the buttons got colorful. But the fatal software bugs in the human brain remain exactly the same. You are playing with leverage again. You are attacking the market with the artificial scarcity engineered by virtual realms. You are driven by the fear of missing out. The spread between asset prices and real-world production has never been wider in human history. Markets are once again being inflated solely by debt, by boundless liquidity. This is not a map, this is your compass. Understanding the mechanism guarantees you will never need a map again. Asset prices decouple from the real economy. That euphoria gets financed purely by easy money and leveraged debt. When you see this, know that smart money is already heading for the exits. They are offloading their bags onto you. Do not join the herd. Understand the devastating power of liquidity, of cash, of absolute patience. Put on your mental armor, because a new wave of liquidation is approaching. This flawless machine is booting up again. It will exploit your emotions, your vulnerabilities, your greed. It will take everything you own. You do not want to be a victim in this cycle. You must adopt the ice-cold mindset of the game makers. Recode your biology. Join the rational minority. Turn your mind into a ruthless, invincible weapon against these financial illusions. You need to survive this brutal simulation. Update your mental survival protocol immediately. Otherwise, you will just be another forgotten silhouette on those modern freight trains. Another desperate ghost who lost it all.